Getting ready. Ah, crap. I didn't pee first. Damn it. Or did I? I don't remember. Good evening, good evening. I was just a little bit late, a little bit late, a little bit late. La 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 la. A little bit late, late, late. Uh-oh. Move this back over this way. Uh-oh, come on. This. Got that. Whoops, get that done. There we go, that works. Go to this. All the way back here. Here we go. Hey, Scott's here. Unfettered. Eric, Kitty, Kitty Titty, Cool Beans. Hey pal, how are you feeling? I'm feeling awesome today. Alrighty. Hey, Brandon's here. Brandon, you're here every night, dude, and on time. Imagine that. Well, it is wrong freaking screen. We're looking at the wrong screen. And there we have it. We are officially up and ready to roll. Alrighty then, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those are companies that have continuously increased their dividends for a minimum of 20 consecutive years. Just shift over to TikTok because Instagram freezes on me. Well, alrighty then. Hey, Doc's here. Way to go, Doc. Alright, so let's get started. Let's start up with where we ended up last night because we still have a bunch of stocks that you guys wanted to take a look at yesterday. So we'll take a look at them today. All that being said, first one on the list, you've got to be kidding me. Snow and Spy. Yeah, we're going to ignore those. Those are always a no. But, very first one on the list today. Richard Bruner, how are you today? Very first stock on the list today that we're going to look at is Macy's. Now, I particularly like Macy's. It's my most profitable stock for the year so far. Okay. It is over 100 years old. It used to be a dividend king, but something happened, so they're not a dividend king anymore. But all that being said, I still like PBR. Benjamin, really? PBR? PBR. All right, we'll take a look at PBR in a little bit, but let's keep going. As I was saying, Macy's is over 100 years old. They have name recognition. Charles, how you doing? Have name recognition you really cannot buy nowadays. You cannot buy the name recognition in which Macy's has. I'm going to make one adjustment to my Facebook video because that one is just off a smidge. There we go. That's a little bit, not much, but come on, right there we go. Got to get adjusted. Nope, right there. Let's turn that one just a smidge. There we go. A little adjustment to Instagram or YouTube. Which one should we adjust? YouTube or Instagram? Let's adjust YouTube because we got more people on YouTube than we do on Instagram. Hey, Arbotco, what's happening? All right. All that being said, Charles, good evening, blah, 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 yada, yada, yada. Franciscum, I can't read that, dude. Francis Macedo. Is that right? It looks like it says Francis Macedo. All right. Macy's, let's take a gander at it. First thing I always want to see anytime I pick up a stock is where is the high of the year, where is the low of the year, where was it a year ago, and where is it currently right now? Well, right now means end of the week on Friday, which was yesterday. So, not much has changed because we did look at this yesterday. Quickly looking at, that's not right. Here we go. Quickly looking at Macy's, here's our high in March. The bottom was in October. Here's where we are right now in August. So let's take a look at those numbers and find out exactly what kind of a trade would Macy's be coming up on Monday. Well, first thing we look at is what is the current price. The current price at this moment in time is $15.98. So $15.98, the 16th is going to be the closest strike price. So the 16 is going for 31 cents a share. That is very close to 2%. Now, I like 2%, but let's take a look at the last 30 days and see if this thing actually looks like a good idea. So 30 days ago, we were at $16.97. We bottomed out the 5th of August. Here's the top right here on the 19th. And this looks really good. Look at this gap. That's going to shoot up eventually.
There's our high in March. Bottom was in October. I took a McKelly's.
Okay, sorry, I had to deal with that. No, I bloody don't want that. There we go. Why do I want the green screen from? No, 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 I don't want the freaking green screen, damn it. Normal, there we go, back to normal. Taking a shot in the dark. Stock symbol ALL. Okay, well, let's take a look at ALL. I've never heard of it before. Yep. There's your shot in the dark, brother. AAL is a monthly optional stock, which means I can only do a covered call once per month. I don't really like monthlies because the numbers just don't work, and I'm not making as much money as I would like to make. You've got to be kidding me. 24 at 9 o'clock at night? Let's reboot this thing and see what happens. You guys don't go anywhere. I'm going to reboot. Alrighty. So we're going to try this one more time. For those of you here on YouTube, you guys Instagram, and those guys on Facebook. Alright. Alright, let's try this one more time. Here we go. Okay, so ALL, I'm not really quite sure why we're looking at ALL. It's a monthly optional stock, and monthly options just don't work. The numbers just aren't there. It's like, no. We're just going to say no, alright? Alright, Bernie, how's it going? Alright, next on the list, a VGO. So, a VGO. There we go. Okay, 166.41. Well, first I want to see is the high, the low, where was it, where is it, what direction is it currently going, what can I buy it for, 166.41. The 167 is going for 410. Well, that's lovely. I like 410. 410 works for me. Okay, that's way over 2%. That being said, AVGO, let's take a quick gander at it. We had a bottom back in late September of last year. That was the bottom of the year. Okay, 79.51. We topped it off at 184.94, and that was in the middle of June. So from the middle of June, she drops, pulls back, drops again. Here's where we are now. It looks as if it should be coming down, hypothetically. So let's take a look at seasonality to find out what it usually does. Death Metal, thanks for hosting this. What are your thoughts on Johnson & Johnson? Ooh, and Johnson & Johnson and Pfizer. J and PFE. Okay, I like both of those companies. However, hey, Vorb is here. However, Death Metal, you're going to find out that Johnson & Johnson doesn't have the greatest premiums whatsoever. Okay, Pfizer does. Pfizer's great. Apache Energy, Bodo. Bodo wants to look at Apache Energy, APA. Here we go. So let's finish up with AVGO first, okay? Now, last 30 days for AVGO, here we are. 30 days ago, we had a bottom right here at 129, and then we shot up to 170. 129 to 170 is a $40 increase, okay? A $40 increase on a $130 stock. That is right around 24% increase. What are shirts on sale? They're clever. I'm glad you like that. Oh, and the shirts. I'm working on it. Believe it or not, I have everything set up to have it done. I just got to do it. And the marketing thing is really not my thing. So building websites and that stuff, that's really not what I want to learn. And I'm new to trading. Where should I start my education? The best place to start your education is on YouTube and TikTok. Figure out what it is first you want. Because just saying you want to invest and make money, that's not being realistic. You've got to figure out how much time you have available, not only to do the trading, but to learn. Because you got to learn first. Then you actually have to do the trading. Love the shirts, love your thoughts and insights even more. Thanks for sharing them. Death Metal, woohoo! Cool beans. In the Macy's example, was Macy's a good candidate? Did it have the right chart setup? Andrew, reading candlesticks. Well, of course we're reading candlesticks. You know what, Death Metal? Charles, we're going to jump back on Macy's a second. Let me just finish up with AVGO. Okay? So AVGO is at currently 166.41. The 167 going for 410. Excellent. Now here is where I'm going to say I'm going to pass on AVGO only because I see it up here. See, 30 days ago we're there, and here's our bottom here. You can only have one 30-day high. You can only have one 30-day bottom. Usually, when you're bouncing off of a 30-day bottom and you shoot up to find a 30-day high, well, Friday was a little bit of a pullback. Well, does that mean the stock is going to start coming down now? That's what it looks like. Okay. Jerry, thoughts on Walgreens coming into next week? All right, Jerry, I'm going to write Walgreens down. WBA. All right. Where were we? Okay, so AVGO. Let's quickly take a look at what AVGO usually does this time of year. For that, we use the seasonality chart. Now, holy cow. Do you see that? On your far left is January 1st. The far right is December 31st. This represents a whole year from January 1st to December 31st. The blue line represents the movement this year. Okay, the little blue dot right there represents the last trading day. That was Friday. So here, look at this right here. This is the section I want to look at. The end of August, beginning of September. But it looks perfectly flat. I love perfectly flat. Perfectly flat means perfectly flat. Perfectly flat means it had no surprises to the upside, no surprises to the downside. So hypothetically speaking, for the next couple of weeks, we should see almost nothing. Almost. But where is it currently? Whoa. Here we go. There we are. Okay, so here's where we are from the 30-day bottom to the 30-day top. Here's the bottom, here's the top, here's where we are. Monday's going to give us a good idea of what direction it's going to go, but you know what? I'm going to write AVGO for 2 weeks from today. AVGO. Now, the reason why you may be asking, why is he writing all these down? I can't remember them all because there's 9,606. We looked last night. Last night we checked, and there's 9,606 companies we can choose any single day. Saying you're going to invest is realistic. Okay, Jason, thank you for that. Okay, cool. All right, so let's continue. So I like AVGO, but not for this week. I want to see it come back down before I jump in. Because what's going to happen is eventually the people who bought at 130 and now it's at 166, the high was over 171. Well, that's a $40 increase. People are going to take profits. Bobby, you want to take a look at John Deere, huh? That's DE. John Deere, DE. All right. So AVGO, I wrote it down. We're going to take a look at it in 2 weeks. Now, why do I write stuff down? Well, there's 9,600 different companies to look at. I'm not going to remember them all. So if I write it down, hey, Reggie Bo Jackson, thoughts on Whirlpool? WHR, Whirlpool. Reg, we're going to get to that in a little bit. TikTok, share the video, encourage more business. Erica, good evening, young lady. All right, let's keep going. Somebody wanted to go back to look at Macy's, so let's go back to look at Macy's before we move on. Macy's, we all know it's one of my favorites. Okay, so here's the 30-day setup. This is what I'm looking at. Now, I already have some Macy's. All right. What about Toyota Motors? Sorry, Erica, we looked at Toyota Motors years ago, and it just doesn't look right. I believe it's TM, isn't it? But we'll take a look at it just as a refresher. Okay. Now, Macy's, somebody wanted to see if it was a good setup for next week. Now, I can't tell you. I honestly can't tell you whether you should buy it or not. All I can tell you is what I'm looking at, and then you guys have to figure out, is it right for you? Well, we saw where it was a year ago. Okay? A year ago it was at $12.47. $12.47. The bottom was at $10.52. Now, we looked up the book value yesterday. It has a nice book value to it. Let's take a quick look what the book value is for Macy's. Now, to look at the book value, we're actually going to go to Yahoo Finance. Slide on down. Book value for Macy's is $15.51. Chesapeake Energy. Tom Pay wants. Is that Tom Powell or Tom Pay? I don't know. Advanced Auto Parts. AAP. And what else was there? BTC. Lucky Perez. How are you today? You're going to be new here. CHK. Now, the reason, Lucky, I say that you're new here, I don't do Bitcoin at all. So you're just wasting your time being here, to be totally 100% honest with you. All right, I don't do Bitcoin. Okay, I love the idea of cryptocurrencies. It's Tom. All right, Tom, I'll see if I can remember that. Hydrogen wants to take a look at U.S. Steel. All right. Yeah, so Lucky Perez, I don't do cryptocurrency at all. I love the idea of it, and I can't wait until it becomes legal tender. I would love to be able to take a little bit of Bitcoin, Ethereum, Doge, or whatever those stupid coins are, and go and buy a cup of coffee with it. But at this moment in time, I can't. I can't pay my bills with it. I can't buy a stick of gum. I can't buy a cup of coffee. So no, it's going to be a no until it becomes legal tender for me. You like it, you do it. All the best to you. XRP, oh my goodness, the same thing. I don't do cryptocurrency. XRP is a waste of time. Sorry, Flash. All right. What were we just looking at? Macy's, the book value. Okay, so great. I like Macy's. And you have to decide whether or not you like Macy's at $15.98. Because at $15.98, I'm getting close to 2% on Monday. Okay. Simone, how are you today? Way to go, Simone. APDN. Homewood Astro. Oh my goodness. You're definitely new here, dude. I have never heard of APDN. Okay, usually APDN. Not to toot my own horn or anything, but if I've never heard of something, it's usually no for this trading strategy. This trading strategy is for weekly options, not monthlies, and definitely 20 years of increased dividends. If the stock is $2.54, I'm having a difficult time believing it has dividends at all. Lucky Perez, if you have a Coinbase account, you could buy anything with Bitcoin, but I respect your response. Hey, Lucky Perez, I am all for, really, seriously, I am all for some kind of currency that is not being controlled by the central bankers. Okay? If the people's currency, I love the idea. Roku, okay, yeah, no, not been around long enough. Okay, ROKU, very new. Yep, I get it. Okay, so I don't do companies that don't have consistent profits. Now, when I say consistent profits, what is the best high yields stock? Bailey, you're new here. I don't really operate that way. Charles, how does book value help in selecting a good candidate for your strategy? Actually, it has absolutely nothing to do with picking. It has to do with absolute worst case scenario. So let's say, hypothetically speaking, Macy's is currently at $15.96. Okay? So if I bought Macy's at $15.96, right, I would own Macy's at $15.96. And the book value for Macy's is $15.51. So what does that mean? Well, basically what that means, if some judge somewhere said, sorry, you need to liquidate, you need to pay off all your debts. Well, all your debts have to do with investors, assets and liabilities. You take all the assets, all the liabilities, shuffle them up together, sell off everything. That's your book value. That's if you sold everything the company owns. And why is it important? Well, it's not important at all, but here's the thing. Let's take a look at NVIDIA, NVDA. Okay, NVIDIA at this moment in time is $129 per share. Okay, here's where it gets a little enlightening for you. And maybe you'll see why I find it NVDA. Okay, here's where it gets important. Now, Macy's is $15 a share. The book value is $15. NVIDIA is $129 a share, but it's only $2 book value. That means if you liquidated NVIDIA, you got $129 per share, you're getting $2. That's it. If NVIDIA sold off everything they own, all the assets, paid off all the liabilities, the investors would get $2 a share. That's why I like looking at the book value. Now, Ford, General Motors, Macy's, AIG, Bank of America, all those companies, the stock value is higher than the book value. So I find that to be no risk whatsoever. Tasha, hi, I tried to find the graph you are working with, but I can't. Could you guide me in finding it? Hey, Lucky Larry's here. Tasha, this is what I'm using is Thinkorswim. Now, you can download this for free at thinkorswim.com. You want stock price higher than the book value? No, I don't. Because absolute worst case scenario, if something goes wrong in the corporation, and the corporation is ordered by the Supreme Court or a higher court to liquidate, okay, I want to know what I'm getting paid. Okay, NVIDIA has a $129 stock value, but a $2 book value. So that means if NVIDIA liquidated everything and paid off everyone, you're getting $2. If Macy's liquidated, well, I'm getting more than I paid for the stock, because right now Macy's is $15.98 and the book value is at $15.80 something. What is Apache Energy book value? Bodo Glint, we'll take a look at that in a minute. Hold on a second. APA, Apache. Okay, Apache's book value is at 1466. Okay, now what are we looking at? Apache APA. Okay, it's a $28 stock. See, I don't mind a $28 stock if the book value is 14 bucks. PBR book value and dividend are amazing. Oh my goodness, Benjamin, PBR. Okay, that's a $14 stock price. PBR. Book value is $28.98. Okay, fine. What is the dividends? Yeah, here's where I have a problem. All right, number one, they have 20 years of dividends. Okay, fine. But here's the thing. Let's go over some of the numbers. Benjamin, you ready for this? Benjamin, this is for you. PBR dividends. Are you ready? 2001, it was a 30-cent dividend. The very next one was 2 cents. Then it went to 23, to 6, to 11, to 25, to 19, to 26, 21, 21, 27, 47, 23, 17, 28, 29, 18, 12, 80, 29, 34, 22, 22. Yeah, I'm going to say no thank you. All over the place. No consistency whatsoever. And I can't see how you can possibly overlook this. Okay, Benjamin, look, the numbers are right there. Okay, 2023, $1.16. Then they dropped it to 76 cents. And then they dropped it again to 47. Bumped up to 55, dropped it to 43, bumped it up to 68, dropped it to 41, dropped it to 39. Hell no. What are you thinking buying a stock that's not consistently profitable? FIHL all day. Derek, what do you think about a medical equipment manufacturer? EDAP. They have colon cancer cure. Okay, interesting. EPAD. EDAP. Okay, Derek, I'm terribly sorry about this, dude, seriously. But EDAP has no dividends whatsoever. Now, when you join this little TV show, or whatever kind of show you want to call this, right up the top corner it says dividend investing for weekly cash flow. This company has no dividends at all. So that's going to be a no. Okay, COS 62. You think FIHL. Okay. Never heard of it, FIHL. And I'm always for, giving people the benefit of the doubt. Fidelis Insurance Holding. Yeah. Okay, dude, I'm going to say hell no to that one all day. Okay, 10-cent dividend, and they paid 2. That's it. Now, when I say I like to have consistent increase in the dividends, I like 20 years, not 2 quarters. Okay, March is what, the first quarter, and then the second quarter of this year, no other dividends whatsoever. Sorry, COS 62, it's going to be a no. What section of Yahoo Finance are you finding the book value? All right, Tom, I'm finding that under statistics. Okay, right under statistics. Now there's 2 book values. The one down the bottom is the one you want to look for. Okay, Bodo, we haven't looked at John Deere yet. COS GBDC. Oh, come on, man. You got to give me a break here. Okay, people. Simple. All right. Donald, we looked at Altria yesterday, and we said no to Altria only because here's where Altria is at the moment. It's at the absolute high of the year. So I don't like the absolute high of the year, and the reason why I don't like absolute high of the year, you make your money in the stock market buying low, selling high, not buying high and waiting for it to go higher. Yeah, no, I don't do that. Sorry, because I do like Altria, I do, but I'm going to wait for people who bought it down here at 48 and 47 to take their profits, and then this thing starts to drop. Because if you think about it, you and me, we decide what is too high and we decide what is too low. See, right now, if I owned it at 52.44, I'd think about selling and taking my profits. See, I'm not in it to get married to a stock. Hell no. I want to jump in, grab a profit, and get the hell out. Hey, Tom, I haven't forgot about Advanced Auto Parts or John Deere. Only dividend stocks I own is AGNC. What do you think about them? Well, we already looked at AGNC earlier. Okay, AGNC, look, we had our 30-day top right here. Here's your 30-day top, here's your 30-day bottom. She went up, she dropped. She went up, she dropped. Now she's going back up again. How far is she going to go up? I really don't know. Well, let's take a look at seasonality to get an idea of what it normally does this time of year. Okay, so this time of year, AGNC, based on historical performance, now this is called a seasonality chart. Okay, it has 10 years worth of stock chart information, and the average is out over the last 10 years. So this is 2014, 2015, 2016, 2017, 2018. Hey, Macarena. Yeah. Anyway, so based on historical performance, and this is not guaranteed, this is based on what did it do last year, the year before, the year before, the year before. On average, it has a tendency to go down at this time period. Okay, don't get me wrong, I like AGNC, but look where the chart is. You can't argue with the chart. Okay, here's the high of the year, here's the bottom of the year. Okay, basically she stayed in a nice channel. Now she's going to the upside. Well, once you get to a certain height, it turns around, comes back down. All right, GBDC. Okay. Now, I understand COS, cause 62. I understand you live in your own little world and you think what you're looking at everybody knows about. I've never heard of GBDC. GBDC. Yeah, that's going to be a no, dude. Sorry. It's a monthly optional stock, number one. Number two, I've never heard of them. Okay, I've been doing this for 20 years. I can rattle off stock chart symbols, and just by you suggesting who it is, I know who that is. I've never heard of this company. GBDC. GBDC. Okay, they've been paying dividends since 2010. So what is that, 14 years? Not quite. I like 20 years. No, think of it this way, okay? I look at companies that have consistently increased their dividends for 5 decades. That's 50 years. I also look at companies that have increased their dividends for 20 years. That's 2 decades. Okay, this one only has 14 years. So no, it's not on my list yet. Okay, now, you may think, why not? Well, here's the reason. Because there's 9,600 different companies to look at. I can only look at so many. And I have certain criteria. 1, consistently profitable. Well, that means they have to increase their dividends every single year. Okay? 2, weekly options. Because I want to have weekly cash flow. And the only way I'm going to get that is with weekly options. So this company here, 14 years worth of dividends. And let's take a look at them. Okay, in 2010, they started at 24. They went to 30, 31 in 2011. Okay, and to 2016, 5 years, and they did not increase their dividends whatsoever. So what does that tell me? Well, that tells me that 5 years, they weren't consistently profitable. You could think about it. If you're doing a business, okay, expansion and growth is a must. If you're not expanding, if you're not growing, why would I put my money into a company that's not expanding and not growing? Okay, it was at 31 cents for 5 years. 2011, 2012, 2013, 2014, and 2015. Okay. And then, 2016, still at 31. 2019, still at 31. Jumps to 45, drops to 32, drops to 29. It's at 29, then it went to 30, 33. What is that? August 2023, 4 cents. And then 37, and then to 7 cents. And then 7 cents again, and then 6 cents, and now 5 cents and 10 cents? Oh, hell no. Sorry, cause, seriously, dude. Oh, I can't help you out. Seriously, I can't. We're talking about your money, okay? If you want to put your money into a company that's not consistently profitable, hey, that's your thing. Okay, please, before you ask me to look at anything, make sure it is consistently profitable. That's number one. Number two, weekly options. That would be great. Bodo, you want to take a look at John Deere? Now, I know John Deere is a profitable company. I don't have to look at that because John Deere is one of those dividend, what do you call those thingies? Dividend aristocrats, I believe. Okay, so now John Deere is a little pricey for me. I like stocks under 250, but I'm going to take a look at this for you. First thing I always want to check is the high. Well, that was back in September. The low, well, that's at the beginning of August. Okay, where was it a year ago? Where is it now? Okay, great. Everything looks good there. Now let's take a look at the actual numbers. What can I buy it for? Monday, 381.70. Okay, this was in $5 increments, so it's 380, 385, 390, 395, so on and so forth. So the closest one is going to be 385, and that's 212. The 380 is going for 455. That's a possibility, the 380. Okay, great. Well, a year ago, John Deere is sitting at 388. The top of the year, last September, that was 423. Look at the movement. Okay, up, down, 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 up, down. Nice movement. Okay, last 90 days. The reason why I want to look at last 90 days is because I want to look at the movement over the last 3 months. Okay, you and me, the buyers and sellers, we decide what's too high and what's too low. Okay, back in mid-June, we went up, down, up, down, up. These are big moves, up, down. Look at that. Okay, where we are right now, 381. I would not jump into this because look where it is. Here's your bottom here. Here's your top. Now, she could continue to go up to challenge these two tops right here. Okay, but that's not that much to go. It's only $10. You know, can it really go $10 more to challenge this high right here? Okay, okay, highs there, lows here. Okay, highs here. Well, where's it going to go next? Usually it calms down. So let's take a look at seasonality. What does it normally do this time of year? This time of year, just basically flat. Okay, John Deere doesn't do a whole heck of a lot this time of year. So if you like John Deere, hey, more power to you. You're getting more than 1%. I personally don't like where the current chart is. Okay. See, here's your bottom. Here's your bottom here, the beginning of August. And here's it now. Okay, it went from 340 to 380. That's a $40 jump. That's more than 10%. So when a stock jumps up more than 10% in 1 month, well, there's going to be a lot of people jumping ship and taking their profits. Okay? Only dividend stocks I own is AGNC. We're going to look at that one. Tom, thanks, no problem. Tom, don't forget AAP. Well, let's take a look at AAP. Oh, wow, I missed all these questions. Woo! Okay. Bama Redneck. Increased dividends 20 years. 10 is hell no. Sorry. Bama Redneck, I'm saying hell no to 10 years. Because I'm looking at 300 companies as it is. If I dropped it down from 20 years down to 10 years of increased dividends, I'd be looking at way too many. I won't be able to keep up. Cause 62, GBDC. You wanted dividends. Okay, I'm going to repeat it in a slower delivery so you will understand. I want consistent increasing dividends for more than 2 decades. Now, if you don't understand what a decade is, that's 10 years. So 2 decades would be 20 years. So GBDC is going to be a no. Mark, MU, huh? All right, Jerry, Dow. Didn't we take a look at Dow the other day? Dow. 53, the 53, the 54s. Yeah, we looked at Dow the other day. Okay, high, low, or was, or is. What am I paying for it? 53.76. The closest strike price is going to be the 54. The 54 is 24 cents. Yeah, no thanks. Not enough money there. Okay, GBDC, $14.99. It's a monthly. Yeah, I can only do a monthly once per month, which means 12 times per year. Why do I dislike them so much? Well, current price at this moment in time, is 15.03. So if I buy it at 15.03 and I sell the 15s, I'm getting 5 cents. Then I got to divide that by 4 because I got to hold it for 4 weeks. Okay, what about those numbers sound appealing to you? Okay, number one, at $15, I want at least a minimum of a 15-cent premium on a weekly basis. For a monthly, that's going to be 60 cents. Okay, that's not even close. Okay, monthly is going to be 12 times a year. Okay, now I'm not a college graduate. I admit that freely. I didn't go to college, but I do know 52 is higher than 12. So if I'm doing a monthly, I can do it 12 times a year. 12 times a year just doesn't cut it for me. So cause 62, I don't know what to tell you, but please reach a little deeper. Find companies that have 20 years of increased dividends. If you don't know who they are, here you go. You ready? Grab a pen, paper, crayon, mascara, lipstick, whatever floats your boat. Dividend Kings. 54 companies that have increased their dividends for 5 decades or more. BlackBerry, what's happening? List number 2, the Dividend Aristocrats. 67 companies that have increased their dividends for 25 years. Dividend Champions. 150 companies that have increased their dividends for 25 years also. Dividend Contenders. 300 companies that have increased their dividends between 10 years and 24 years. And then the 5th list I have for you is Warren Buffett's Stock List 2024. I like Warren Buffett. He seems to know what he's doing. I have no problem piggybacking off of his stocks. Okay, MU, huh, Mark? Well, look at MU. 102.85. Cool. High, low, 103. Ooh, nice. All the numbers. Check it out. Here's the high, here's the low, here's where it was, here's where it is. Right now, 102.95. The 103 is going to be the closest. It's going for 289. Well, that's over 1%. That's what I'm looking for. It's really not that difficult. But let me just quickly check something. What is MU dividends look like? Yeah, I'm going to say no. The reason, who came up with this? Mark. The reason why I'm saying no to MU, I like 20 years of increased dividends. This was 2021, 2022, 2023, 2024. That's 4 years. Why would I be looking at a company that's been having dividends for 4 years and not consistently increasing? Because look, 2021, it was 10 cents. Then it jumped to 12, and it hasn't changed since. Okay, so what does that tell me? Let's say in the last 4 years, well, they haven't been consistently profitable. Okay, so if you are giving out 10 cents a share as a dividend, and the very next year you pay 10 cents yet again, well, that means you're not making any advances from 1 year to the next. You're just staying stagnant. And if you're staying stagnant, not increasing, you're actually going backwards because inflation is taking our buying power away. So if I'm buying a stock that doesn't increase their dividends to keep up with inflation or consistently increasing, it's kind of a pointless endeavor. All right, so sorry, Mark, MU is going to be a no for me. If you like it to be considered a profitable trader, do you have to make 5% or 10% a month be profitable trader? Okay, Harry-O, it's different for everyone. Now, you got to remember, Harry-O, most people used to buy stocks and hold them for decades and collect a dividend or look for capital appreciation. Right? I don't do either one. I'm looking specifically for cash flow. I'm looking to get in on a Monday. I'm looking to get out on a Friday. It's a simple strategy. It was created for my 9-year-old daughter back in 2008. Okay, she was 9 years old, and she said, "Daddy, can you teach me what you're doing?" Oops. So here we go.
Hi, I'm JC, and as you being part of my internet website company, which my dad didn't like me calling it that, but I do. Hi, I'm JC, and as you being part of my internet website company, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly 12. You're right.
Maybe getting like 2%. That's 50% per year. That's cool. Hey, this is James.
That always makes me laugh every time I see that. Now, I did that video with my daughter 12 years ago. I think she was 11 or 12 at the time. And she'd been training for a couple of years, and she wanted to get a little bit more into it. Now, here's the thing when you're trying to teach a 9-year-old how to trade. It has to be simple. And adults have the most difficult time with that one phrase. It has to be simple. It has to be safe. It has to be predictable, consistent, and no way for her to lose. Because we all know what happens when a 9-year-old loses money. She cries, makes dad feel like crap. Mom gets involved. I'm on the couch for the next couple of days, and it's just not a happy thing. So, simple, safe, predictable, consistent, and no way to lose. That's the 5 criteria I had to come up with this strategy. So here it is. Are you ready? The 5 rules. Rule number 1, never, ever, ever buy something you do not understand. When you come up with a company and I say, what the hell is that? I don't understand it. That's going to be a no for me. Okay, I've been doing this for a long time. Companies I know and understand, companies I grew up with. Now, I grew up in the 60s, 70s, and 80s. So there's a lot of companies I know of, all right, that I invest in. Let me just read off a couple to you and see if they make sense. Come on. August 24. Ally Bank, Aon, DHI, Siri, Visa, Wells Fargo, Moody's, Heimlich & Payne, Kroger, Capital One Finance, Apple, Chevron, Jeffries, UPS, Louisiana Pacific, Johnson & Johnson, Heinz Ketchup, T-Mobile. That's just some of them. I know almost every single, I don't know who DHI, I have no idea what they do. But that's on Warren Buffett's list, so I'll take a look at that one. Okay, what else do we got? Ooh, look at that one. Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Wells Fargo, Starbucks, Hershey's, Emerson Electric, Walmart, ExxonMobil, Clorox, U.S. Steel, ConocoPhillips, Apple, Chevron, UPS, 3M, Johnson & Johnson, Baxter, eBay, Corning. I heard of all these companies. When you rattle off stuff I've never heard of, well, it's going to make me feel a little queasy, number one. Then I start looking in a little deeper. Well, they don't have 20 years worth of dividends. Why the hell am I looking at them? They don't have weekly options. Why the hell am I looking at them? Every single green spot you see on here represents an EX date. And the EX date is the last day the stock trades before the dividend is paid. And this is where dividends come into play. Each one of these green dots represents the dividend date. If I want to collect a dividend, I have to buy it before the green dot. Okay? Here's Target, the 21st of August. Here's eBay, the 30th of August. Whirlpool, the 30th of August. Walmart, the 16th. Wells Fargo, the 9th. Kinder Morgan, the 31st. So on and so forth. I know all these companies. Merck is on my list, a billion. Okay, Merck actually on my list somewhere. Okay, now I only do stocks that I know of and that I am comfortable with. Okay, remember rule number one: never buy something you do not understand. Rule number two: never sell at a loss. Rule number three: make sure the company is consistently profitable. Consistently profitable. The best, easiest, and fastest way to see if they're consistently profitable is, do they increase their dividends? Now, the dividend, if you didn't know, is a portion of the corporation's profits that they give to the shareholder. So if they're consistently profitable, okay, year after year after year, well, that dividend, that portion will increase every single year. If it doesn't increase every year, well, that means that the bottom line didn't increase from one year to the next. Okay, so when I look at a stock and they pay the same dividend year after year after year after year, that only tells me that they're not consistently profitable. They're actually losing money because they're fighting against inflation. So inflation continues going up, which means a dollar value is continually going down. So if we're not consistently profitable, yeah, we're going backwards. So no, I like companies that are consistently profitable. Rule number four is make sure they have weekly options. The reason for weekly options, well, I grew up in the 60s, 70s, and 80s. I went to work 8 o'clock Monday morning and 4 o'clock Friday afternoon. I want to be paid. Same thing. Monthly options, I can't do that. Okay? I don't like monthly options. They just don't pay the same. You can write off every single monthly optional stock, put it up against a weekly. A weekly gives a 1% or more. Those are the ones I like. 1% or more per week is over 50% per year. All right, let's progress forward. Alrighty, so MU is going to be a no for me. Mark, MRK. Uh-oh. MRK. First thing, high, low, where was it, where is it, what direction is it going? Alright, the price, 116.62, the 117s are going for 78 cents. No, not 1%, terribly sorry there, billion. AGNC is my biggest dividend stock holding. Alright, Derek, cool beans, glad you like it. Donald Powell. I have been reinvesting my Altria for 5 years now. Cool beans. Chevrolet, how are you? So happy I found your stream. GMR Turtle. Okay, welcome to the show. Donald Powell. Now, Donald, don't get me wrong. I love Altria. I really do. They are dividend king. They've increased their dividends for over 50 years. That's 5 decades. They've been in business for over 100 years. I really don't think Altria is going anywhere. However, here's where they are now. Now, here's an interesting idea. Just an interesting idea. Okay? Number one, it's at the high of the year. Okay? It's not a profit, Donald, until you take it. And two, nobody ever went broke taking profits. So it's at the high of the year at this moment in time. So what are the odds of it going up higher? Oh, you think it's a 50-50, but it's not. It's 1 in 266. Because you can only have one high of the year, and you can only have one low of the year. There's 266 trading days in the year, so the odds of tomorrow being the high of the year, Monday, of course, okay, is 1 in 266. Now, like I said before, the people who bought it back here in February at 40 bucks, well, now it's at 52. That's a $12 increase. Now, a $12 increase on a $40 stock, because it was a $40 stock back in March, February, January, November, and December it was 42. But still, that's a $12 increase. A $12 increase from here to there, that's a 26 or 27% increase. Okay, and as I said earlier, it's not a profit until you take it. So yeah, it looks good on your paper. Okay, now I'm not sure if you know this, but Miss Kamala says she wants to start taxing unrealized gains. So if you bought it down here Now it's up here. Whether you sell or not, you still got to pay taxes on that, according to Miss Kamala. All right. Imagine that if you bought a house for 100,000 30 years ago, and now it's worth $1 million. You got to pay taxes on that 900,000 valuation increase, whether or not you sell. All right, let's keep going. Kranal Patel. Hi, can I check for Albemarle, please? Ooh, I like Albemarle. ALB. Albemarle has some nice numbers. Very quick, very first thing. It takes 3 seconds, maybe less. High, low, where was it, where is it, what direction is it going? Okay, 5 things. High, low, where was it, where is it going now? Okay, high, low, was, is, direction. That's 5, really quick. Second, what am I buying for Monday morning? 91.63, the 92s are going for 152. That's over 1%. It's really not that difficult. You want to quickly see what 1% is? You see where it says right here, 91.63? You take the decimal point, move it over 2 places. 0.91 is 1% of $91. It's that easy. And the 92, which is the closest strike price, is going for $1.52. That's 1.5%. That's 1.5% for the week for Albemarle, if you like the company. So let's check out the numbers. Okay, last year, 191.24. A couple of weeks later, she jumped up to 203. So 203 is the absolute high of the year. Now from there, she drops down to this trading range, okay, between 114 and 120, 130. And now here's the bottom right here, the last 30 days right there. This is what it's looking like for the last 30 days. 30 days ago at 92, jumps up to almost 100, okay, almost 100 right there, pulls back, here's our bottom here at 72. So our 30-day bottom, which was, what, last week? And then she jumps up, now we're at 90. So from 72 to 90, that's an $18 increase. Okay, that's over 20%. Think about it. If you're an investor and you buy a stock at 72, and now 1 week later, or a week and a half later, it's up over 20%. Are you going to take that profit or are you not? It's not a profit until you take it. All right, let's keep on going. What charting program are you using? Derek, that's not a charting program. This is actually a trading platform through Charles Schwab. You can download this trading platform. It's called Thinkorswim. Go thinkorswim.com, download it onto your computer, your laptop. It's owned by Charles Schwab. Okay, now Charles Schwab bought it from TD Ameritrade, who bought it from the creator. Enzo Amor. Que pasa? Oh, Enzo Amor. Bonjour, bonsoir. Comment ça va toujours? I don't know if I got that right. Anyway. Are you only analyzing dividend stocks now or growth stocks as well? Jason, I'm terribly sorry, I don't do growth stocks. Now, the reason why I don't do growth stocks is I'm 60 years old. I'm retired. Growth stocks are a younger man's game. It is. It's a young person's game. Okay, you're going to take 5,000, 10,000, 20,000, put it into a company and wait for it to go up. Yeah, sorry. If I do that, I'm going to have to go back to work. No, thank you. Okay, so look at it this way, Jason. I make 1% every single week. Safe, predictable, consistently. Okay, 1% every week. That allows me to live comfortably. Okay, if it wasn't for that, I would have to go back to work, and I'm going to say no thank you. Now, you may think, hey, you're an able-bodied person, you should go back to work. Yeah, no thank you. I've been working since I was 13. 1973. In 3rd grade, I got my first job at Old Man Simmons Farm. All right? Yeah, no thanks. I don't want. I'm kind of enjoying the retired life. How long have you been full-time? Well, I quit last November. Okay, so last November is when I decided to retire. So full-time ended for me in November. All right, let's keep on going. Bamarock. Oh, yep. Derek, literally no premium, but income is nice. But I like 1%. I like 1% too. Okay, if you think about it, 1% per week, safely, predictably, and consistently, comes to over 50% per year. Now, if you do not think 50% a year is good enough for you, then you're definitely in the wrong place. How the hell did we drop to 57 people? Holy shit. Oh, it is Saturday night. All right, if we can't get the numbers up a little bit higher, I'm going to call it a night. So you guys like, share, comment, all that crap. Get this number back up over 100 again. Steve, you want Intel. Intel, INTC. Now I like Intel, INTC. I think I might even own some Intel. Hold on a second. Nope, not that one. Hold on. Intel, nope. Intel, right here. Yep, I got some Intel right here. Alright, so I'm in Intel at $20.99. INTC. Okay, here's our high, here's our low. Here's where we are the last 30 days. Okay, so let's check out Intel. 30 days ago was our 30-day high. We got this big drop here. Here's our 30-day bottom. Look at the slow incline to the upside. Very slow. Okay? But at 2066, if I sold the 21s, well, that's 31 cents a share. That is well over 1.5%. Now, I like Intel. Okay? I own some Intel. So I have no problem whatsoever buying Intel over and over again and continually rotating it so I get that safe percent every week. Justin, thank you for that. Bama Redneck, Jeffrey, dividend stocks are the bread and butter in this strategy. He does other things. Yeah, I do, but this is the only thing I do here. Can you check Abelmom? We already checked Abelmom. Jason, I've been watching a pharma stock, SHPH. What do you make of its recent trend this week? Jason, I've never heard of them. Okay? Now, I don't know if you were here earlier when I say if I've never heard of anything, more than likely it's going to be a no. Yeah, it has no options. Okay? And look at it. 6.5, now it's at 2. It's jumping up. So you need to check if you like it. If you like it, it's at the bottom now. Now, you're going to make money in the stock market buying low and selling high. It doesn't get much lower than this. This is the low of the year. If you like the company. Me, no thank you, because it's not been around long enough and it doesn't have any historical performance and it doesn't have options at all. Intel, we looked at that one already. SPY, I don't do spiders. They don't pay the same. The numbers, and it's a totally different strategy. Uh-oh, I missed all these. Ooh, holy cow, did I miss all these? Okay, Mac, do you compare your returns over the time to the S&P 500 to know if you're beating the average? Mac, I average over 50% per year. As a matter of fact, Mac, let's take a quick gander at where I'm standing at this particular moment in time. Now, at this particular moment in time, all right, I share 3 accounts with you guys. Now, I have like 6 accounts. I only shared 3 of them. It used to be 2, but I pulled in another one. But, where are you? Mac, you ready for this? Account number 1, year to date, 46%. I think that's a little bit better. Oh, look at this one. Account number 2, 69%. Well, that's not bad. Account number 3, we're up at 10%, but that's only been a month old. That account is only a month old, and I'm already up over 9% for 1 month. Okay, so let's keep on progressing. And if you're thinking about it, Mac, and you really want to do some testing, okay, here's all my trades for the year. Okay, all the way back to week number 1. Okay, week number 1. Okay, 2.12, 2.99. Week number 2, 1.3, 2.43. Week number 3, 0.85, 1.35. Week number 4, 0.9, 2.78. Week number 5, 1.03, 1.62, blah, 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 blah. All every single week. We're currently in week number 39. Monday starts week 39 for the year, or was it week? I don't even know. Anyway, let's keep on moving. Moving along. Okay, what else we got here? 1% a week, and he's beating the S&P on an annual basis. I am. Krunal already looked at Abelmont. All right, let's keep going. GBDC is throwing 2 times dividends in a month. Simone, take a close look at that again. How do you know the stock has a weekly payout? Ishmael, good question. Here we go. Now, Ishmael, you're thinking about it a little bit wrong, because it's very important to use correct terminology. All right. Now, I'm not insulting you or anything. You may think it's one thing and it's not. Now, it's not a weekly payout that I'm looking at. I'm looking at weekly options. 30 August 24, that's this coming Friday. 6 September, well, that's 2 Fridays away. 13 September, that's 3 Fridays away. 20 September, that's 4 Fridays away. Every single week, it has an option. And the option is what's allowing me that weekly cash flow. Now, I don't buy options, I sell options. So if I buy this stock right here at 1973, which, by the way, Mrs. Flagg was my homeroom teacher in 3rd grade in 1973. Hi, Mrs. Flagg. Neil. Oz Labour Party supporting nuclear power, blah, 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 blah. Okay. I have no idea whatsoever. Okay. Where was it? Oh, so if I buy it first thing Monday morning, 1973, the closest strike price is going to be the 20, and that's 5 cents. That just doesn't work for me. Or I can look at the 1950, and that's going for 30 cents. Well, I'm losing 23 right away, and I replace it with 7. The numbers just don't work on this one. Okay, so Ishmael, what I'm looking for is a good, solid company that I like, okay, that I'm actually making money on. Well, this one right here, Macy's, $15.98. The closest one's going to be the 16. Now, the 16 at 31 cents, that's close to 2% for the week, and it has weekly options. Now, GPC is a great company, but it has monthly options. See, 20 September, 18 October, 15 November, 20 December. That's monthly. I can't do that because I can only do it once a month, and once a month doesn't give me the kind of money that I'm looking for. I'm looking for 1% per week. And I have found that certain companies consistently give me more than 1% per week, and those are the ones I like. All right. Poseidon's Last Molar. What's happening? Ricky, ASO. What the heck is ASO? ASO. ASO. Academy Sports. Wait a second. We looked at this one before. Now, I've never heard of it. Well, yes, I have heard of it because somebody asked me to take a look at it. ASO. Okay. All right, so ASO. Hey, Ricky, ASO 22, 23, 24. It's only 3 years worth of dividends. Started at 8 cents, then it went to 9, now it's at 11. Okay, well, they're increasing it every year. DAC tells me they're profitable every year. Okay, 8, 9, 11. Okay, they've only been paying dividends for 3 years. So it's going to be a no. All right, Mac, sounds like you have a strategy you believe is beating the average, but you would have to test it. Oh my goodness, Mac, you're new here, aren't you? You're new here, Mr. Mac.
Hi, I'm Jason, and me, as you being part of my internet website company, which my dad didn't like me calling that, but I do.
2 trades a month, 20 days. 20 days in the month of January, you do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 25 for the whole year, and you get at least 2%. That's 20. 50% per year. That's cool.
Okay, so, Mac, I'm not quite sure if you understand. I shot this video with my 9-year-old, well, she was 11 at the time. Now, I created the strategy for my 9-year-old daughter back in 2008 because she wanted to learn to trade. Simple, safe, predictable, consistent. That's what she needed. Simple, safe, consistent, and predictable. Okay, this is me in 2012. How long ago was that? That was 12 years ago. Okay, now, I haven't done it yet, but I do have these little thingies, okay, that go all the way back into 2012 and 2013, showing what I bought. See, here's timestamp right here. April 8th, 9:35 a.m. I covered call with Lowe's, 238.62, sold the 240s for 216, blah, blah, blah. I have those going all the way back to 2012. So you're asking, have I tested it? Well, I actually live it because I've been doing it for the past 15 years. Now, I've been trading for 20 years, okay, but the first 5 was kind of, I was new and I was all over the place. All right, so just to answer your question, yeah, I have tested it, and yeah, I continue to do it consistently. Sky, there you go. Sheila, how are you? Oh, Sheila's here, Mac. Against the index fund and prove you consistently beat it. Oh my God, an index fund. Do you mean, kind of curious, I'm just going shot in the dark. You mean an index fund, kind of like VOO? VOO is an index fund. It's an ETF. Okay, and what does that give? Okay, VOO is paying 1.3% for the year. Okay. SPY 1.24% for the year. Okay? Does anybody have any other index funds off the top of their head? Because Mac, you're new here. Okay? Trust me, you're new here. I'm very good with names. I know when someone's new, especially when they start commenting and what they say. I have a great memory most of the time. Now, I have been doing this for I've been doing this particular strategy for over 15 years. ASX 200. Okay, let's try ASX 200. ASX 200. ASX 200 is not an exchange, not a fund. ASX. Alright, it's not giving me mutual funds, ETFs, stocks, indices. Here we go, indices. Okay, ASX 200, here we go. It's not giving me any numbers to work with. So how the hell am I supposed to know? Okay. Try and check and see if I'm human. Here we go. There you go. Verify to continue. Here we go. Alright, so anyway, Mac, I hope that fulfills your desires whatsoever. Yes, I have checked it. Yes, I get over 50% per year. I'm already over 60%. We're not, well, just a little over half a year. Grew up with them and I like them. Alright. I'm beating it by 3.5%. Okay. What is she doing now? I have no idea what she... Oh, my daughter, yeah, she does... she's a dog groomer. All my kids have no interest in money whatsoever. I think they're waiting for me to do that. Otherwise, you shouldn't be recommending this strategy to most people. Well, Mac, you are highly inappropriately wrong. I come out here and I say specifically, don't listen to a damn word I say, do your own research. This is what I do. Okay, I'm not suggesting this to anyone. I'm not recommending this to anyone. What I'm doing, I'm just taking a look at the stocks you guys tell me. So, ASO, I tell you what the numbers are. Okay, well, I can get a third grader to say, wait a minute, ASO 5501. Well, the 55 is going for 60 cents. That's over 1%. Great. Well, here's the high, here's the low, here's where it was years ago, here's where it is now, and this is the direction it's currently going. I don't recommend anything to anyone. Okay? I admittedly say, hey, I have no education whatsoever, other than the fact of, what do they call that? Road less traveled. Okay? School of hard knocks. Kevin, you recommended any books. Do y'all recommend any books on this strategy? No. Is your daughter doing investing now? No, she's not. Me too. Way to go. Siri is a good one. Yes, it is. DHI, I think, is Dr. Horton's Home Builder. DHI, Dr. Horton's Home Builder. I don't know. But DHI is on Warren Buffett's list. Yeah, I think so. All right. Books that I would recommend. You know what I liked? I liked the book Wall Street Money Machine by Wade Cook. That was a good one. All right, so let's keep on going. Siri. A Billion wants to take a look at Siri. SIRI. Now, I had some Siri last week. I got rid of it. Now, like I said, I don't suggest anything and I don't recommend anything. I tell people, do your own research. Okay, never blindly listen to someone. Hey, look who's on here. Joe Bunzel. What's happening, Joe? Stanley, how you doing? And Jerry Christie. Holy shit, dude. I saw a picture the other day. How's it going, all y'all? All right, so let's keep on going. We're taking a look at Siri at the moment. I can buy Siri at 321. Right there, see 321? The 3s are going for 18. Not quite there, but the 350s. Look at the 350s. It's going for 4 cents a share. Now, I know 4 cents a share doesn't sound like a lot, but 4 cents a share is over 1%. So the question is, do you like Siri? Do I like Siri? Well, I did buy some Siri, and I still have some. A year ago, we're at 411, topped out in December at 577, bottomed out at 244, and that was in June. Okay, so the last 30 days, take a look. Last 30 days. She shot up, there's your high, here's your bottom, she's up, she's down, she's up, she's down, she's up, she's down. Where is she going next? Hypothetically speaking, she should be coming to the downside before she turns around and goes back up again. Hypothetically. Now, what does she normally do this year? And by that, you usually go into the seasonality chart. And that's like, what has it done over the last 10 years? Well, over the last 10 years, from this current point where we are today, right here, okay, she's going to go up a little bit into the end of the month, and then she's going to pull back a little bit. Now, that's not guaranteed. That's just what it has done over the last 10 years. 2014, 2015, 2016, so on and so forth. That is the 10-year average movement for Siri. Now, I like Siri because Siri's giving me over 1% for the week. Do I mind buying it at $3 and selling a covered call at $3.50? No, I don't mind that at all. The numbers work out very nicely for me. La 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 la. Mac, oh, where do I get a 52% return? Well, Mac, that's what I'm doing here. I'm showing how I get 1% per week. Okay? I just showed you about Siri. So you have to ask yourself a question. Do you like Siri? And do you like Siri at that price? Now, Siri was not originally on my stock list. Siri is originally on Warren Buffett's stock list. So that is good enough for me. So, hey, ACDC man, what's happening? How you doing? So just because Warren Buffett bought it, well, then I'm going to take a look at it. That makes sense to me. Now, is Warren Buffett giving me that advice? No, he's not. Okay, am I giving it advice? No, I'm not. What I'm saying is, I like it at 321. Okay, Monday morning, I will be buying some. at 321. I will sell the $3.50 covered call. It's one of the safest trading strategies that is. So if I sell somebody the rights to buy it from me at $3.50 that expires on the 30th, which is next Friday, I can make 1%. And if it hits my target, great. I'll be back into cash the following Monday. If it doesn't hit my target, well, I will still own Siri at $3.21. And you know what? I really don't mind owning Siri at $3.21. Let's keep progressing. How long do you keep a stock? Oh, Erica, I think I just said it just now. I like to buy it on a Monday and be out on a Friday. The longest I've ever held anything was 9 months. And that was, no, that wasn't Kimberly Clark. Who was it? Yeah, it was Kimberly Clark. Yeah, Kimberly Clark. I've owned it for 9 months, and that was last year. Consistently. Yep, Mac. That's a good thing. All right. Cost you too, but a split my portfolio and do this with 70% and 30% with high premium stocks. Cool beans, Redneck. I'm kind of curious how it works out for you. You know what's funny is that, holy cow, it's only 50 people. Somebody had a couple of trades this week, and they said they're going to come back on Friday to let us know how it worked out. Poseidon's last mola. I thought Kamala's unrealized gain tax is only high net worth. I really don't know. Okay? Just listening to that woman, it makes me nauseous. That's almost as bad as what's that Corinne Pierre, what's her name? The girl with the mop head, curly hair girl. Yeah. Every time she opens her mouth, it makes my flesh crawl. Mac, feel like Macy's stock has been going down quite a bit over the past 6 months. Well, Mac, you're 100% correct. Let's take a quick look at Macy's. So we've been following Macy's since January. Okay. She's been in this little trading range between 18 and 20 for the last 6 months. The last 30 days, she just dropped down. Okay, great. But here's the thing. Macy's is my biggest performer to date. Let's get out of there. So if we come all the way back and look at week number 1, okay, here's week number 1 right here. Macy's, General Motors, Ford, CVS. Week number 2, Macy's, Ford, General Motors, Clorox, Lowe's, Ford. Week number 3, Clorox, General Motors, Capital One Finance, Ford, Macy's. Okay, if you take a look at all my trades for the year, okay, week 3, Macy's, week 4, Macy's, week 5, Macy's, week 6, Macy's, week 7, Macy's, week 8, Macy's, week 9, Macy's, so on and so forth. All the trades are right there, available online for you to take a look at. Okay, you pull up one of these, take a look. Here's the timestamp. Okay, 2/26/24, 9:30 a.m., 9:30:02. That means 9:30 and 2 seconds. That's like the first trade of the day. The market opens at 9:30. Okay, buy 2,000 shares of Macy's, 1937. Sell 20 contracts of Macy's, the 1950, at 86 cents a share. I don't know where you went to school, but 86 cents a share on a $19.50 stock, that's over 4%. I love Macy's. Macy's have been very nice to me this year. Let's keep going. Okay, what's next? Proposed gain tax, yep, what? CO2, I've been buying calls and puts and losing this way. I have been going strong. Okay. Thoughts on HOLO. What the heck is HOLO? Now that should give you an indication right there. What the heck is HOLO? H-O-L-O. Uh-oh. H-O-L-O. Yeah. No. Sorry, dude. Savvy for you. Nope. Tom. With respect, I wish you would take the tickers in order you receive them. Alright, Tom, I'll see what I can do about that. Erica, blah, blah, blah. What's my net worth? None of your damn business. I guess he's got paid for views. Nope, not at all. 1% a week compounded is 62%. Yep, I know that. Mullen. Ooh, I missed something. Where was I? Alright, here we go. Simone, no dividend for Intel. Yep, I know that. Mac, why net worth is over 2 million now? Well, good for you. Charlo, you should pay yourself 200 with your earnings teaching stocks as non-profit. Great help. I was thinking about converting to a non-profit organization. Thinking about it. I'm here to keep going. And how and why do you close a trade? Oh, that's an interesting question. Mac, try in a paper account for 90 days and see for yourself. All right. How do we see that? Okay, Justin Mullen, how do we see what? You gotta remember, I got, hold on. Got YouTube here, TikTok here, Instagram here, Facebook here, and YouTube down here. It's very challenging for me to keep up with all the conversations that keep popping up. So when you say, how do we see that? I have no idea what that is. Hey Mac, if you are consistently beating the S&P 500, you should be managing a big fund. Oh my God, I love it when people tell me what I should do with my life. If you don't like what he's saying, then you should be not. What are you doing here? Thanks, Erica. Mac, he actually has that in the works. Yes, I am actually working on putting together, I'm debating between a hedge fund or a mutual fund. Now, I know a hedge fund is going to cost me $60,000 just to set it up, just in the paperwork. Now, a mutual fund is a hell of a lot more money. So I got to ask myself, is it really behoove me, or is it really to my advantage to do so? I'm still toying with the idea. Now, I admitted many times my children have no interest in money whatsoever. I'm trying to build a corporation for my grandson. He's 4 years old. So this is a slow building process. You're in the presence of the foundation formulation. Foundation, whatever. I'm creating the foundation for the corporation, which I am working on. Yeah, so I have it in the works to do a hedge fund, but I can't do it by myself. I need to get a board of directors. So we'll be working on that also. I figured after about a year, I'll put an invite out for anybody who wants to be a board director, and there will be a buy-in, blah, 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 all that kind of nice, neat, fun stuff. But it's all in the works right here. What you're seeing at the moment is one day at a time, doing the exact trade so anyone can see exactly what it is I am doing. So at some point in time, when my corporation starts offering dividends, okay, people can then buy them. I have to coordinate with an insurance company who will be guaranteeing it. And they probably will not guarantee it over 15%. Okay, so I have a friend of mine who does his trading, and his is guaranteed at 15%. So you could invest in his company and get 15% guaranteed every single year. Well, great. Well, I'm showing you how I get 50% every single year, yet the insurance companies won't let me do it that way. What are you doing? What am I doing? Well, Neil, you've been here long enough. You see what I'm doing. All right. Erica, I'm here. Don't. Erica, he's counting his 2 million. I think Mac left the house. Yep. Yep. Channel bleed over, whatever. Can you beat it consistently? The overall return, not just a dividend. Now, Mac, I very rarely ever get dividends. Okay? I don't pay attention to them at all. I only use the dividend as a precursor to tell me when a stock is going to move. Because stocks move for one or two reasons. One or two. That's the only reason stocks move. One is an unknown reason. Well, what's an unknown reason? Hurricane, flood, tornado, blizzard. There's a lot of unknown reasons. What am I proving? Oh my God. What kind is this one? Whoops. Which account is this one? Okay. Dong, da da dong, dong. Okay, so this particular account here, Mr. Mac, my biggest loss is WBA, Walgreens, but I still own Walgreens, so that's not a big deal. Profit and loss year to date, 41,000. Net liquidation value 143. This account I started out with $100,000 this year. Hold on a second. What was it? Okay, this account I started out beginning of the year with $117,000. I've taken out to date, as of this moment, almost 30,000. The current balance at this moment is 142. I just showed you the profit and loss statement for this particular account. Okay, net liquidation right there, stock buying power, blah blah blah, available funds, blah blah blah, blah 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 blah, all that crap right there. Commissions and fees, 1,000, maintenance requirement, blah blah blah, blah blah blah. That's all that stupid shit. Okay, but year-to-date profit and loss 41,000 at this moment in time, with $100,000 account with $117,000 beginning balance in January. Now I've already taken out over 30,000 out of this account. Okay. Week 18, 2.61, withdrew $1,000. Week 19, 1.24, withdrew 1,200. Week 20, 0.71, took out 1,200. Week 21, 1.2, so on, so forth. The numbers are all there. I really don't have to prove shit to you. Believe it or not. You like it, you like it. You don't, you don't. You know what? You don't really need to be here, and I don't really need to listen to you. Whoops. Alright, so let's keep on going. What's next? So when are you? Mac, you're just wasting time. Thank you, thank you, thank you. Can you beat it consistently? Yep. Whatever. Mac, when you sell a call, Kerber, you wish the stock will go up. All right, what is it? Kariba or Curlba? Curlba, whatever. Normally, when I buy a stock, okay, after I take a look at what I'm looking at, okay, I like to look at the high, I like to look at the low, I like to see which direction it's going, I want to see what I'm getting paid. Is it going to be more than 1% for the week? Great. I'll buy it on a Monday. I would like it to be in the money by Friday, which means if I buy it right now, 1973, and sell the 1950s, come Friday, I would like it to be above 1950. If it's above 1950, then the following Monday, I'll be all back to cash again, and I can do it again. And just rotate it 1 week after another, after another, after another. Leaving TikTok, see you on YouTube. You got it. What trading platform are you using to sell your options? Justin, this is Thinkorswim. Okay, now Thinkorswim used to be a standalone trading platform. Tom Sosnos, I think that's how you pronounce his name. He made it 20, 30 years ago. Now he sold it to TD Ameritrade. TD Ameritrade now got bought out by Charles Schwab. So Charles Schwab owns it now. AAP, all right. We've been putting this off long enough. Advanced Auto Parts, AAP. Holy cow, look at that big drop. There's the high, here's the low, here's where it was, here's where it is. Look what happened here. I'm kind of curious what happened here. Well, let's take a look. Now, I like Advanced Auto Parts. At this moment in time, 49.20. The closest one's going to be the 49. Well, it's going for 120. I'm losing 20 cents off the top, and I'm collecting $1. That's 2%. Well, now it has my interest. All right, so the last 30 days, the last 90 days. Look at this. Look at this movement. Isn't that beautiful? Down, up, down, up, down, up, down, up, down. Okay, what happened here? More than likely that has to do with the, what do you call it, earnings. Okay, great. What does that mean? What does it mean? Well, was the earnings good or was the earnings bad? Now, did the market maker do this just to make some money, or did the market maker have an actual good reason to drop it? Because if you think about it, the market maker is the person is the person in charge of finding out where we're going to start in the morning. There's only one number that is controlled by a single person. That's the market maker, and that's the opening price of the day. Now the high, the low, and the close and the volume, well, that's all me and you. We are the investors. We buy, we sell. We decide what's too high, we decide what's too low. So the last 30 days, let's see what's happening. Last 30 days, here we go. 30 days ago, Advanced Auto Parts was at 59.25. The 30-day high was 64.65. Okay, pulled back, went up, down, down, right here. Okay, this is where we are. So you need to ask yourself the question, do I like Advanced Auto Parts at this price? Well, if this is going to be the new 30-day bottom, I like 2 days to the upside before I decide to jump in. Well, the numbers, we already decided the numbers is going to be a 2% trade. I like 2% trades, okay? But the bottom was Friday. So I've got to wait 2 days to the upside, which means Monday, Tuesday don't really count. So Wednesday, so it's not really going to be on my list for next week. And I do most of my purchasing on Monday. So by Wednesday, even if it shoots up on Monday and then shoots up on Tuesday, well, I'd be jumping in on Wednesday, and that's a little bit too late for me. So it looks like I will be doing it next week, probably the week after. So I'm going to write Advanced Auto Parts, not for next week, but the week after. AAP. Tom, all right, I'm done listening about the dialogue with Mac. Yeah, I am too. What trading platform? Blah, blah, blah. Wins. Take a look at Win. I'll write Win down. W-Y-N-N. All right, we're going to take a look at Win in a little bit. All right, Mog, I never invested before, and I'm afraid to start. Mog, there's absolutely nothing wrong with that. If you're afraid to start, just sit and watch. If it's something you want, 'cause eventually, Mog, look at it this way. At some point in time, all right, you're going to retire. Okay, you're going to be too old to continue working. It happens to everyone. I'm having a difficult time. Okay, I'm having a difficult time admitting it's time for me to retire. I get up in the morning and I think, hey, shouldn't I be doing something? Anyway, besides the point. At some point, you're going to have to take whatever money you've collected over your lifetime, and you have two choices. Do it yourself or give it to someone else to do it for you. That's a choice only you can make. All right, Sheila. Okay, yeah, already did that. Don't. All right, the rumor about tax on unrealized gains is completely fake news. Okay, thank you. Charlo, why not just buy near a 90-day low and sell at 80% of 90-day high? Okay, Charlo, I understand what you're saying. That's not consistent and it's not predictable. Okay, you're missing a couple of parts to the equation. Simple is one, safe is another, consistent and predictable. Okay, now, if I do it on a weekly basis, okay, now I've been doing it for the last 20 years, a weekly basis. I get up in the morning, brush my teeth, do all that kind of nice neat stuff, and then I jump in on the stock market and see what it's doing. Okay, only since January have I included you guys in the my little, what do you call it, morning ritual. Okay, so yeah, it's too hard to predict it, and there's no consistency there, in my humble opinion. But if it works for you, not a problem, great. Mac, I see you there. Sorry, how do we see the list of all the trades you made over the last year, the page? Justin, if you go to the top left corner of your screen, you'll see my little face there. It says Dividend Stock Talk, blah, blah, blah. Yeah, if you click on that, that'll take you to my bio. In my bio, you see a little envelope. That's how you can send me a message. You'll also see a link that goes to the 10-minute trader. So here's the 10-minute trader right here. Okay, the 10-minute trader. I've actually had this website for over 20 years. Now, as you slide down, it says current trades for 2024. Okay, and view all right there. You click on view all, then you're going to see all the trades right there. Ooh, Rich Bruner. WFC, Wells Fargo. WFC. Alright, the next one we're on. Ooh, take a look at this. Ford. We haven't looked at Ford in a while. But we have a couple more questions. Great job. When we're going to take a look at when. I wrote when down. Tom, good night. See you next time, Tom. Nice seeing you here. Ford is on the list next. First thing, as always, high, low, where was it, where is it, what direction is it going, anything interesting? Was a gap here, gap here, gap here, a gap there, a gap here, and a gap here, and a gap there. Wow, that's a lot of gaps. Hello. Oh, I'm missing some of the questions over on YouTube. What are you doing? The shares get called away, blah, blah, blah. Hello, hello. Hey, Feline, how you doing? Someone, how are you doing? All right, so who's over here? Purcell. Purcell, how are you? All right, Win. Win is on the list, but we're looking at Ford at the moment. Okay, now we see where the highs, we see where the lows, we saw all that kind of nice, neat, fun stuff. Next, I want to see what am I paying for it first thing Monday morning, 11:27. Well, the 11:27, the closest one is going to be the 11, and that's going for 33. But if I'm losing 20 cents off the top, I'm only walking away with 5 cents. It's not worth it. Sorry, Ford is just not worth it for this week. Don't get me wrong. I love Ford. I have traded Ford. Can you answer the question, please? Feline, what is the question? If the shares get called away on the EX date, will we still get the dividend? See, that's a tough question. Okay, the EX date and the date of record used to be two different dates. Let me quickly show you so you understand. Okay, let's go take a look at 3M. All right, we all know who 3M is. There's 4 dates to remember. Date number 1 is the announcement date. That's self-explanatory. The company tells you what the dividend's going to be, blah, blah, blah. Date number 2 is the EX date. The EX date is represented by all these little green dots. That's the EX date. That's the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, self-explanatory, the payment date. Now here's where it gets a little confusing. Okay? August 2024, that's the date. Okay, EX date, 8/26/24. Date of record, 8/26/24, the exact same date. Okay, so let's go back 1 year. Come on. 2023, okay. It says August 2023. Okay, I'm waiting for it to populate. All right, here we go. Okay, look at the dates now. The EX dividend date, August 24th. Date of record, August 25th. Last year, it was 1 day. Well, last year it was 2 days called settlement. So you have to buy the stock and you have to hold it for a day before you can get the dividend. Well, now it's the same date. So I honestly can't answer that question. Okay, but if you want the dividend, you have to buy it before the EX date. So if you buy it before the EX date and somebody calls you out on the EX date, I really don't know who gets the dividend, because the date of record is the exact same date as the EX date. Welcome to the live chat. Remember to guard your privacy, blah, blah, blah. How about, ooh, somebody wants to think with Halliburton. We'll write Halliburton down. Okay, so we'll look at Halliburton in a little bit. Alrighty. Alright, WhatsApp, etc. do we need for your morning trading group? You don't need any apps for my morning trading group. You need to sign up for the morning trading group, and you do that on right there, where it says live trading. Okay, live trading online, or you can come down here and it says Morning trading, join our trading group. And you click on that, and that will bring you to Dividend Stock Talk Patreon. All right, so let's continue. Next. All right, so we just looked at Ford. Ford's going to be a no this week because the numbers just don't work. 86, dude, how are ya? By the way, he did say the name of the trading analysis platform he is using on screen. What time will you be on the call on Monday morning? All right, the morning trading group on YouTube. The morning trading group meets every morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. Now, I stay online and answer whatever questions you guys have until you guys are done asking questions. I will stay on there all day if you want me to answer questions all day. I'm thinking to sign up. Well, Eli, we'll be more than glad to have you. Now, I do cap it off at a certain point. Okay, I'm only taking a certain amount of people. It's not like, come one, come all. No, at some point, I'm going to say no more. I think we're almost there at that point. Okay, so anyway, Monday, Tuesday, Wednesday, Thursday, 9 a.m. until you guys are done asking questions. Friday, 3 p.m. Now, the reason I'm on at 3 p.m. on Friday is because the market closes at 4. And if I'm doing weekly options from Monday until Friday, I buy them Monday morning. They expire Friday afternoon. They actually expire Saturday, but you can't trade on Saturday. So at 4 o'clock on Friday, there's no more trading. So we want to get in at 3 o'clock to make sure all our trades are safe and all our trades are in the best position for us to make whatever. Okay? So that's what the morning trading group does. All right, Charles, thanks. Evening, James. Red 86, about time you get here, dude. All right, that's exciting. I earned money, has been sitting for decades. Cool. Charles, please explain what you mean by buy on Monday and get out on Friday. Justin, sorry if I missed this, but how do you join the morning trading group? Justin, in the top left corner of your screen, a little picture of me, you click on that, and that will take you to the 10-minute trader. The 10-minute trader, okay, very first page, right there, live trading. Okay, or you can slide down and say live trading, join our morning trading group. Easy as that. So let's get back to where we were. All right, QDTE, sorry, it's going to be a no. Travis, you joined today. Cool beans. Garrett, you want to look at QDTE? I've looked at it before. I can tell you no now, or I can pull it up and tell you no. QDTE. Okay, monthly optional stock. That means it's a no. The reason why I don't like monthly optional stock is because the numbers just aren't the same. They don't pay the same. Had a long day, but I made it. Whoa, bloody rotten then, sir. Lovely to have ya. All good, Garrett. Wait, Win, we already looked at, didn't we? Wait a minute. Kuroba, or is it Kariba? Okay, we're going to look at Win in a little bit. Okay, so you guys give me these stocks to take a look at. Okay, Win is actually close to the bottom at this moment in time. So let's keep on moving. All right. Let's keep on moving. Yeah, so QDTE, no. Sorry, dude. Got to have weekly options. Monthly options, hey, if they work for you, great, wonderful. The money's just not the same for me. I did monthly options for a few years. It just didn't work. Weekly options gets me an average of 1% per week, and that's what I'm looking for. Next on the list is going to be, GIS. GIS, General Mills. All right, quickly. High, low. Where was it? Where is it? What direction is it going? It looks like it's going to be a no. Yeah, okay. Last 30 days, it's at the 30-day high. Sorry. Now, I'll take a look at General Mills. What's the number? 70.83 to 71, 55, 65. Yeah, no. Not even 1%. Sorry. General Mills is going to be a no. Uh-oh. Now, somebody wanted to take a look at Alibaba. So we're going to take a look at that one next. BA. Now, Alibaba is not on my list, so I have no idea why we're even looking at them. BA. Yeah, Alibaba is going to be a no. They've only paid 2 dividends. In 23 and in 24. Don't get me wrong, the first dividend was $1, the second dividend was $1.66. Well, that's over a 50%, that's a 60% increase from one year to the next. If they can continue doing that, that might be something you want to take a look at. But only 2 dividends? Yeah, that doesn't work for me. All right. Wally World. Let's take a gander at Wally World. WMT. Yeah, WMT is going to be a no. Look at that. How can this thing continue to keep going up? Get a big gap up here. Here's your 30-day bottom. 30 days ago, we're at 70. She drops down to 66. Shoots up to 75, 70. Okay, at some point, they're going to be taking profits. Now, don't get me wrong. I like Walmart. But Walmart, WMT, I'm going to write it down for 2 weeks from today. WMT. Okay, now, I say it over and over again. You make your money in the stock market buying low, selling high. Not buying high and selling higher. Kirby, why not sell a put then if it's going down? Yeah, I tried that. Okay, I looked at it and said, oh, hell yeah. So I looked at the puts on Wally World. Uh-oh, where is it? I think I got rid of it. Or it expired, one or the other. Yeah. WMP, yeah, it's gone. I did that. And guess what? It did absolutely nothing. Okay? Now, on Monday, I saw this big jump right here. Okay? This was Thursday, this was Friday, this was Monday. I saw that big jump there. I said, oh, shit, there's going to be profit taking. So I bought a put down here. And guess what? It kept on going up. Yeah, so I stopped buying. I get sucked in every once in a while. Will you be showing us your trades on Monday before you put them in? Feline, if you are in the morning group, you actually get to watch as I do my trades. Now, I showed the three accounts that I actually have. This is a paper trading account, this is a live account, and this is a live account. These are the 3 accounts that I share with everybody here. I have 6 accounts, but these are the only 3 that I share. So, in the morning trading group, you get to watch me trade all 3 accounts. After that, it's open for questions and answers, and I will stay until you guys are done with your questions. Not many good ones for this week. All right. Where do you see the history of dividends paid by the company? Charles, good question. How many members do you have? I think it's 67. I think it's 67. All right, Charles, where do I see the history coming of the dividends paid? Is there room? Yeah, it's a Zoom. It's a Zoom call. Okay? It's a Zoom call. Every day you get a link and you get to see all the trades that I do. So let me get to this question. Where do I see the history of the dividends paid by the company? Well, you go to Yahoo Finance. All right? Okay. Yahoo Finance. Over on the left-hand column, historical data. When the historical data pops up, okay, you have this information here, dates you want to search, and then what you want to look for. Do I want to look at the historical prices, dividends only, stock splits, capital gains, and then I pick on what dates. What dates do I want to see? Okay. Do I want to see 1 day, 5 days, 3 months, 6 months, year to date, 1 year, 5 years, or the maximum? I always check on the maximum because I want to see how well the company has consistently increased their dividends. How many participants are there on each morning meeting? It varies anywhere between, I think, 14 to 30 on a daily basis. I don't want too many people on. Okay, I am going to cut it off at a certain point because I don't want too many people on because I want everyone to be able to talk to each other. And there is a Discord that goes along with it. In the Discord, They seem to have a world of their own there. They talk to each other and they help each other out. I try to get on there as much as I can. How much is the membership? Well, there's 3 different levels. Actually, there's a bunch of different levels. You know, you can actually get one-on-one tutoring with me, or you can just jump in on the morning calls and be able to ask questions all you want. I think it's $100 a month if you want to do that. Let's continue what we're doing. That's all the questions. Cold beans. We're at 11 o'clock. We got a half hour to go. Next on the list is SDIV. What the heck is SDIV? Okay, usually when I say what the heck is that, SDIV, Global X ETF. Yeah, that's going to be a no. All right, next. DHT. What the heck is DHT? DHT. Again, another no. CVS. Ooh, I like CVS. Here we go. CVS. First thing I want to see. The high, the low. Where was it? Where is it? Look at this big gap down. Look at where we are right now. Cool. 58.89. I'm looking at the 59s. 69 cents. That's well over 1%. CVS has been around for over 100 years. Can I do Halliburton? Halliburton is... Sorry, dude. Halliburton's at the bottom of the list. We're not probably going to get to it today. Okay. How much is the minimum account balance required in the account in order to have enough collateral? Well, my grandson has started out his account with $50. So you can basically start with whatever you want. However, if you're tight on money, I don't suggest you joining. Because joining is it's not for everyone. Number one, it's boring as hell. It's the same stocks over and over again. It's monotonous. It's repetitive. It's very slow. It's only looking for 1% a week. But think of it this way, all right? Now, I showed you the accounts I have and the ones that I'm sharing with you. Where is it? Right here. Okay. So, this account here, $142,000. 1% per week is $1,400. Now, when I say, hey, this is James from Dividend Stock Talk, brought to you by that 10-minute trader, it actually takes me less than 10 minutes a day to do my personal trading. Now, when I do other people's trading, it takes a little bit longer, and when I'm teaching, it takes even longer. So, on average, I'm not online for more than 10 or 15 minutes in my own personal account. So that's 5 days a week: Monday, Tuesday, Wednesday, Thursday, Friday. 10 minutes, 10 minutes, 10 minutes, 10 minutes, 10 minutes. Okay, that is less than an hour. Less than an hour a week to make 1% of $142,000. That's $1,400 a week for 1 hour of my time. But then I have this account here. It's at 167 at the moment. Well, that's $1,600. Okay. How much do option prices pay out change Monday morning? Well, here's the thing. Okay, let's go back here. Okay. At this moment in time, 30 August 24, that's this coming Friday. That is 6 days away. These option premiums have 6 days worth of time value. Now, an option, the way they figure out the pricing on option, well, that's fun. You got the Black-Scholes pricing method. Okay? Do you ever buy midweek if there's a good deal? Well, yes, I do. That's why we jump in every day. Okay, most of my trades are done on Monday and Tuesday. Very rarely will I buy on Wednesday or Thursday. I will if the numbers look right. Okay? I meant in order to trade your style selling options, you have to have collateral. Yes, you're absolutely correct. It's going to be different for everyone. Okay, there's, holy cow, there's only 48 people here? Holy shit, that's horrible. Anyway, everyone has a different amount to start out with. Okay, now I just showed you what I have in 2 accounts. The third account has over 100,000 in it also. Do companies with monthly options ever change to weeklies? Who determines this? Travis, I really honestly don't know. Okay, I honestly do not know who's in charge of going from a monthly to a weekly. You need 100 shares to sell a call, so it depends on the stock price. Yep. Everyone getting laid. No, everyone getting paid. Anyway, let's not go down that area. What were we talking about? We're talking about CVS. All right, so CVS at this moment in time, 58.89. The closest strike price is going to be the 59s, and that's paying 69 cents. That is over 1%. Great. What do the numbers look like? Well, we know a year ago it was at 66.25. The beginning of January was the high of the year, 83.75. The bottom of the year was late May, 52.77. Look what's happened recently. Look at how nice that looks. Down, up, down, up, down, up. Well, Friday threw us off a little bit. Is that coming down, or is this a fluke? I don't know. I like 2 days in one direction in order to decide which direction it's going. Well, Wednesday and Thursday were both down days, but Friday's an up day. So that's kind of like an indecision. Don't really know which one's going. So no SPY, Tesla, or higher price stocks, I guessed. Yeah. Well, I have to stick to what I can afford. Now, there's some companies I just can't afford to buy. I can't afford to buy 1,000 shares of an $800 stock. Okay, even 100 shares at an $800 stock is a little pricey. Do you try to stay away from earnings dates in case there is a negative catalyst? Yes and no. Okay, I really don't pay attention to earnings because earnings, sometimes you see a positive earnings and stocks go down. Sometimes you see negative earnings and the stocks go up. It all depends on the market maker. Okay, now I've given my opinion on the market maker several times. Now the market maker sometimes takes the information, manipulates it so he gets a better payday. Do you trade one stock that meets the 1% premium criteria, or do you trade as many as meet the criteria? Charles, that's a good question. All right, this account here, Bank of America, Chevron, Ford, Intel, Macy's, Marathon, MPW, Schlumberger, and Walgreens. Okay, that's one account. That's what, 8 companies? 9 companies, holy shit, 9 companies. This account here, CVS, Ford, Halliburton, Kohl's, Marathon, MPW, and Walgreens. So this is 7 stocks. This one here, 1, 2, 3, 6. So it all depends on how much money I have and what looks good. Do you diversify between several different stocks every week so you aren't all in one stock? Never, ever, ever go all in one. I did that once and I learned a lesson. It was the most expensive lesson I've ever learned. I lost $91,000 in 1 week because all my money was in one stock and one stock only. That was RNWK, Real Networks. I don't even know if they're still trading nowadays. RNWK, Real Networks. There's no options on it. Okay. Oh, yeah, they last traded in 12. See the number right here? Or is it right there? 12, 21, 22. That's the last time they traded. Yeah, so I don't, that stock cooked my goose. It did. How did you recover from the $90,000 loss? Well, it took me a couple of weeks to be able to sleep. It was horrible. It was the worst month of my life. Because the funny thing is, I lost $91,000 that week. Several of my tenants moved out of the house and didn't pay their bills, and the wife left me for someone else, all in the same month. I was like, oh man, talk about being humbled. Damn it. All right, let's get back on track. Next stock we're looking at, MJ. What the heck is MJ? Who came up with MJ? No. MJ, monthly. No. Sorry, what question is that? Uh-oh, missed that question. See, YouTube, the question pops up and then it disappears. That's why ETFs are better to do with this for people with less risk tolerances. Yep, good deal. Just joined your Patreon group. Not sure. I have a question needed to follow and execute. Will you advise? Now, Justin, I can tell you a few things. Now, certain things I can do and certain things I can't do. I can't tell you what to buy. I can't tell you what to sell. I can't tell you how to set up your account. Okay, you have to figure that out on your own. Now, when you're setting up your account, I do suggest that you talk to a tax strategist. If you don't want to pay taxes, to talk to a tax strategist. Can you tell us how you lost it, please? Well, yeah, Simone, RNWK, and I think it was 2000, 2001, 2002, somewhere in that area. They jumped up $35 in one day. $35 in one day. So here I'm thinking, well, I was young, I was had an ego. I had an ego the size of a room, you know. It was terrible. I was a real asshole back then, from what I've been told. Anyway, so I thought I was smarter than everyone else. So I put all my money into one position because I thought with a $35 increase for no reason whatsoever, and I did look around for news, $35 on no news whatsoever. So I said, oh, there's got to be profit taking come Monday. Well, guess what? It jumped up again another $45. My broker calls me up and says, hey, excuse me, Mr. Gardino, you're done. And to this day, I have never, ever, ever, ever heard anyone say that they got a phone call like that. Call from your broker and say, excuse me, sir, you're done. We're liquidating your positions to cover your losses. I've never heard anyone else get that phone call. All right. Anyway, better get it all over with at once, I think. Yeah, well, it was interesting. It was a total life changer. All right. How does a major event like that, like the CrowdStrike stock crash, affect your strategy? Well, the interesting thing about the CrowdStrike, I had my best friend since junior high school, 1978. My best friend, he was at my wedding. Okay, his father passed away, and we all jumped in to fly on up to pay our our respects. He was my best friend, and he's also the godfather for one of my kids. So we were going to fly on up there, and the day before the flight, the crash, all the flights got canceled, and I'm sitting here with my thumb up my ass saying, Bobby, man, I'm sorry, dude, all the flights got canceled. Yeah, so that's what happened. Well, all right. To answer your question, Charles, how does a major event like CrowdStrike stock crash affect your strategy? Well, look at it this way. Most companies I look at have been in business for over 50 years. Well, in order to have 20 years of increased dividends, well, you got to be at least 20 years old. Most companies don't make it to 5 years. 1 in 100 or 1 in 1,000 make it to 10 years. Well, can you imagine how many companies actually fall off before they get to 20? Most companies I look at have been in business for over 100 years. So if you pick a good company, it's going to recover. Now in 08, 2021, 1929, when the big stock market crash, the correction in 87, the pullback in 08, the financial crisis, and then the pandemic. Yeah, most companies lost anywhere between 30 to 80% of the valuation during those time periods. Hold on. It must be scary to carry trade crash a few weeks ago. Your positions go down big. Yes, but here's the thing. Never buy something you do not want to own long term. So if you like it, buy it, hold on to it as if you're going to hold on to it forever, and then sell the covered calls as you progress. Now, the stock market's been around for over 400 years. It ain't going anywhere. Options were introduced in the 70s. They're not going anywhere either. So if you buy a good company and you want to hold on to it and continue to do a covered call strategy like this one every single week, week after week after week. Now, like I said, I've been doing this for 15 years. The longest I've ever held anything is 9 months. Okay, and that was Kimberly Clark. Not that I wanted to. I bought it. It went down. It took 9 months for it to turn around, come back up for me to get out of it. Did I really care? No, I didn't. Because in that 9 month period, I collected 3 dividends and about 12 or 15 premiums. Remember, I can't do that one. Every week, okay? Hold on, let's get out of this one. Okay, every week, 30 August, Friday, 6 September, 2 Fridays, 13 September, 3 Fridays, 20 September, 4 Fridays, 27 September, 5 Fridays, 4 October, 6 Fridays. Every single Friday, an option expires. So every single Monday, I am selling a covered call against my position. Depending on where I bought my position and the current strike price will tell me where I'm selling the next premium. This one's horrible. But anyway, yeah, the premiums. 1650, 17, 1750, 18, 1850, 19, 1950, 20, so on and so forth. If I buy it at 1973, I can sell the 1950s, I can sell the 20s, I can sell the 2050s, I can sell the 21s, I can sell whatever I want. Every single week, I sell a covered call against every single one of my positions because I want a consistent, predictable cash flow on a weekly basis. Trust me, look at Halliburton. All right, Feline wants to look at Halliburton. He's been asking over and over again. Halliburton, and just to be upfront with everyone, I do own some Halliburton. It's in a great spot on the chart. Interesting. First thing I want to see is the high, the low. Where was it? Where is it? And in what direction is it going? 32. The 32 is going to 32. Exactly 1%. Okay, great. Okay, a year ago, Halliburton's at 38.41. Got a double top at 43.85, and that was the middle of October. Okay, last 30 days. This is what the last 30 days looked like, and it actually looked very favorable. You're right about that. 30 days ago, we're at 33.50. Shoots up to 35, drops down to 30. Now from 35 to 30, that's a $5 drop. That's over 12%. Okay? Now, look where she's going. Very, 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 very slowly to the upside. Well, that's wonderful. I like slow to the upside. Don't forget Win. Let's take a look at Win next. What's the difference of buying a call versus a covered call? Ooh, Dino, that's a good question. Let me explain it to you really quickly and simply. Right, the safest trading strategy there is to buy a stock. That's safe. Buy a stock. Okay, the second safest strategy is a covered call. That's where you buy the stock. In this instance, buy the stock Halliburton at 32.04. Okay, so buy the stock at 32.04. Now a covered call is where I buy the stock at 32.04, sell somebody the rights to buy it from me at 32, and then I collect this premium right here. Okay, so what happens? If the stock's above 32 come Friday, well, I'm back in, I get all my cash back. And I get to keep this 1%. Well, that's what I'm looking for, the 1% on a weekly basis, consistently. Now, buying a call, okay, a call has an expiration date. So if you think it's going from where it is now, 32.04 to 35, well, yeah, you can buy call here. It's going to cost you 2 cents a share. So as the stock price goes up, getting closer to the 35, well, your value of your option is going to increase. The value of the option increases faster than the stock price does. So if the stock price goes up $1, okay, so if the stock price goes up $1 from 32 to 33, that's only a 10%, no, not even 10%, that's a 0.3% increase. But the premium on the option, okay, if it's at 35, that's 2 cents, and it increases 3 cents. So every time the stock moves up $1, the option moves up 3 cents. So, if the stock goes from 32 to 33, well, you made $1 off of a $33 stock. Okay, fine. But if the stock went up $1, the option price went up 3 cents. It doesn't sound like a lot. But if you bought it at 2 cents and it went up 3 cents, well, that's a 150% increase. See that? So, with a $1 move, okay, the stock would be at 33.04. Great, you made $1 off your $33 stock. Okay, it's a nice little return. Okay, whatever. But the option goes by the delta at 3 cent delta, at 0.03 delta, and the strike price. The call option is 2 cents per share. So you can buy it at 2 cents a share, which is $2. Okay, for one contract, $2. But if the stock goes up $1, the option will go up 3 cents a share, or $3, which is a 150% increase. Okay? What happens if the current price goes down and stays below the strike price before the option expires? Well, child, that's an interesting question. So, hypothetically speaking, at 32, okay, right now, 32, that's the one we're looking at. If by Friday it's at 32 or higher, right, I will be back into cash come Monday. That's ideal. That's what I'm looking for. Hypothetically speaking, if it's at 31.99, just below 32, well, I will take that stock into next week and I will write another covered call against it. And I will continue writing covered calls against it until it hits my target price. Now, my target price is always going to be higher than my purchase price. The interesting thing about purchase prices is they stay the exact same. So if I jump in Monday morning and buy it at 32.04, the stock can jump up to 36, 39, $100, whatever, but my purchase price will stay the exact same. If the stock drops $10, $15, whatever, my purchase price will still stay the exact same at 32.04, unless I dollar cost average down. Okay? It's all just, a lot of math. All right. All that being said, it is 11:29. 11:29, and we have no new questions. Cool beans. All right. Well, let's keep on going. Wynn. Let's do Wynn. We'll close off with Wynn. WYNN. Wynn Resorts. First thing, high, low. Where was it? Where is it? What direction is it going? Look at it. It's bouncing off this low. Now, when I tell you you're going to make most of your money in the stock market buying low, selling high, well, you're not going to get any lower than the low of the year. There it is right here. Okay, the high of the year is there at 110. The low of the year is here at 772.40. Sitting at 77 at the moment. Charles, thank you. Intel. We already looked at Intel earlier today. The best for last. Yeah, all right. So, let's take a look at Wynn. Currently, the number is 77.70. The closest strike price is going to be the 78. Now, the 78 is selling for 71 cents, which is less than 1%. Now, I own Wynn. I bought Wynn back in May, and I still own it. Every week, I get a premium from it. Now, I've collected one dividend already, and it has another dividend coming up. I have no problem whatsoever holding on to it longer and longer. Now, where am I with Wynn, to be exact? In this account, I'm in Wynn at 87. Okay, so currently it's at 77. I bought it at 87. All right, so more than likely, what I'm going to end up doing this week is I'm more than likely going to be selling the 80s. Okay, so here it is right now, 77. Okay, the 78s are too close, 79s are too close for my comfort level. I'm going to be selling the 80s, and the 80s are only going for 19 cents a share. That is not even close to 1%. But I already own it, and that falls into the category of the Cow analogy. Now, if you don't know what the cow analogy is, if I buy a cow and the cow gives me a gallon of milk every week, great, wonderful. If something happens to my cow and it's only giving me a quart or 2 quarts, a half a gallon, I'm not getting rid of the cow. I want the cash flow. The cash flow is consistent. I like cash flow. It's not giving me 1%, fine. I'm okay with it. Not 100% happy, but it is what it is. Stocks go up, stocks go down. Eventually, okay, if we pull back a little bit, okay, now I bought at 87, which was right here in the end of May and June, right there. I bought at 87. All right. Now she dropped down to 72. Now she's coming back up again. All right, hold on a second. When? Okay. Originally I bought it at 98.16. I dollar cost average down to 85, and I dollar cost average down again at 81. Now I'm into it at 54,000. That's my cutoff. I'm not putting any more money in to win. Why does it keep falling? It keeps falling because you and I don't think it's worth it. Okay, we are the ones who decide what the prices are. Okay, the market maker, he just sets the starting line. Okay, the market maker sets the starting line, and you and I, the buyers and sellers, we decide, hey, I want to buy it, it's too cheap. I want to sell it and make my profit. All right, 11:30. Done for the evening. Can you teach me stocks? At the Cross Scripture. Ooh, interesting name. Cool beans. Yes, I can. Send me a DM. We'll get back to it. It is 11:30 on a Saturday night. It's not one of the greatest nights of the week, but you know what? Tomorrow's Sunday night, which means we're getting ready for opening up on Monday. Okay, Monday is my favorite day. That's when we do most of our trading. All right. All that being said, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks, weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Now remember, I don't give advice, I just show you what I do. You just subscribe. Cool beans. So, I only show you what I do. I do not give advice. I do not make recommendations. You can ask me a question, I will answer it honestly, but I can't tell you what to buy, I can't tell you what to sell. All right, I don't have any licenses for that. The only license I have is to drive a car. That's it. You guys have a great night, and we'll see you again tomorrow night, 9 p.m. Just subscribe. Way to go, Justin. We'll see you tomorrow. All right, finished over there in Facebook. Done over here on Instagram. Done over here on TikTok. You guys have a great night. And YouTube, you guys have a great night also. All right. And down here, it was a wonderful evening. You guys have a great night, and we'll catch you again tomorrow because the sun will come out tomorrow.